Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 956A, and today's date is April 27th, 2016, and the title of the episode is The Central Bank Continues the Recovery Illusion While the Economy Implodes. Now, before I get started, I just want to make an announcement. I just placed an interview with Greg Manarino on the X22 Report Spotlight YouTube channel. So you can go right over to the YouTube channel, just type in X22 Report Spotlight, bring you right to the video, or you can come over to the X22Report.com site, scroll down a little bit, look over to the right-hand side, you'll see the video there, or you can go to newssentinel.com, same thing, scroll down a little bit, look over to the right-hand side, you'll see the video there. Let's get right into the economic collapse financial news. Now, we're going to head out to Greece, and I know last year the corporate media, the U.S. government, the bankers, they were all telling us that Greece is fine now. They got their money, everything's okay. But you know what? Since that time period, and we've discussed this many, many times, we knew that we were going to head back to the same exact situation, and that's what has happened here. Greece is requesting an emergency summit. The EU is rejecting this request because they want austerity on the people. And they're looking for the government to come up with new austerity measures. And the Greek government is delaying. They don't want to touch the pensions. They don't want to go along with these new austerity measures because they know the people are suffering right now. And if they take it too far, they're going to have the people rise up and say, okay, we need to get rid of this government. And we thought that this government, Tsipras, was going to go against the bankers, and it looks like maybe he was bought out. Maybe he was threatened. Maybe something else happened, but he went along with the banking establishment and didn't stand up for what the people wanted. And we see already that Greece now faces a default of about 3.5 billion euros. Which has come due in July. So we are back to the same exact situation. Nothing has changed there. Oh, well, I should say things have gotten a lot worse. Now, out in the UK, British retail sales fell at the sharpest rate in more than 4 years this month. And of course, they're blaming it on everything. It's the weather, it's cold, it's everything else. But what we're seeing right now is that sales are continually declining in the UK, and we're seeing department stores, clothing retailers, they have the biggest fall in sales. And we're seeing this not just in the UK, but in many different countries at this point, because we're starting to realize that as more and more people are being laid off, it's getting harder and harder for people to go out and purchase these goods. And even if you have a job, you still hear rumors that there are layoffs in the company, and you're very nervous, you're very afraid, and you're saying, you know something, maybe now is not the best time to go out and start to purchase all of these goods. And this is what a lot of people are doing. Now, to give us some idea here in the U.S. and how bad the situation is, the tax season was very disappointing for H&R Block. They're laying off 250 workers. They said they handled around 19.6 million tax returns, and they're saying that it was 4% less than last year, and their revenue has declined, and this is why they're laying off people. Now, this makes sense in our scenario. There are continuing layoffs with these corporations. Thousands and thousands of people are being laid off. They're not getting hired, and if they are hired someplace, it is a part-time, low-wage position, which means there's going to be less tax revenue coming in. And that means those people who are laid off and can't find a job, guess what? They don't need to file their taxes. They're not going to pay H&R Block or any other accountant for that matter. And what we're seeing right now is that it's all fitting into the scenario that we've been talking about, how the economy is falling apart, how it's declining, deteriorating. Retail, housing, GDP, unemployment, the real unemployment numbers, they're a complete mess. On the other hand, you have the U.S. government, central bankers telling us that everything is fine, that unemployment is at 5%, maybe even it's going down to 4.8%, most likely before the elections come this November. And we can see right now that someone again is lying. Now we see the millennials, they have overtaken the baby boomers as America's largest living generation. And this is according to Pew Research. And the millennials, they're defined as ages 18 to 34. And they number about 75.4 million. And they're a little bit above the baby boomers, which are the ages between 51 and 69. And they're around 74.9 million. But the problem is that the millennials, they earn about 20% less than the previous generation of workers. And they are drowning in $14 billion in debt. Now, the average working 23-year-old in New York City earned around $23,543 compared to $27,731 in 2000. Moving up the age scale a little bit, the average 29-year-old made around $50,331 in 2014 versus $56,000 in 2000. And what we're seeing right now is a lot of millennials, they don't have high-paying jobs, they have part-time jobs, and they're living with their parents. So we're seeing a lot of millennials, they're not independent. And we've seen this percentage drop because back in 2007, 51% were independent. Now only 45% are independent because they need to live with their parents because they have this huge amount of debt. They can't find the high-paying jobs. So what's happening with those people that are 18 to 34? They're going to college. They get all this debt. They enter the workforce or they can't even find a job. And even if they do find a job, it's minimum wage. Or the salary is much, much lower. And they need to continually live with their parents. This type of economy is going to go nowhere. And this is what we're seeing right now. Because the next generation can't be worse off. And we see right now they are. Now the housing market is continually tumbling. We know that new home sales, starts, permits, all declining. Pending home sales, we're seeing a pop-up, not everywhere, because out west we're seeing a huge decline in pending home sales. But when overall we're seeing a little pop-up. Now we saw this pop-up in new home sales, and then it sharply declined. Pending home sales right now, they are popping up a little bit, and new home sales are declining rapidly. Very interesting. Because what we're seeing right now is that we're seeing these little pushes to make everyone believe everything is fine, and then they return to their trajectory heading downward. And this is how bubbles work. This is most likely a little dead cat bounce, and we're seeing that everything is continually declining. And we're seeing prices of homes, they're leveling off, and in many places they're declining rapidly. We're seeing all these other things happening at the same time where everything is declining. Permits, new home construction, pending sales, all these different things, they're all starting to decline, and the bubble is leaking. Some places it's already popped. Because when I look around the country, I shouldn't see homes still on the market over 6 months now. And they've lowered the price about 8-9 times. And these are nice looking homes. And what we're seeing is that there's no traffic going to these homes. And this tells us at this point, because we saw this back in 2007 going into 2008, we're starting to see the whole thing rapidly deteriorate right in front of our eyes. Now, a sure sign that the economy is coming down is what Apple reported. Apple, they completely shocked the financial world. They reported their revenue for the first quarter, and it fell by $7.4 billion compared to the same quarter last year. Now, what we're seeing right now is a decline in sales for Apple. And they haven't seen anything like this since 2003. Now, analysts were expecting some type of drop, but nothing like this. And this tells us that the people at this point, they don't have the discretionary funds. They're saying, you know something, maybe I don't need the next phone. I'll keep the one I have. A lot of people have been losing their jobs. And this falls right into what we've been talking about. We've been talking about the economy contracting, people losing jobs, retail contracting, store closures, and it's continuing on. And it doesn't fit into the U.S. government central bank model where people are getting jobs. Unemployment is at one of the lowest points right now that we've seen in a long time, and they're telling us that everyone is working. So if everyone is working, why are we seeing a contraction of the economy? Something is off here, and we know what it is. We know the government is lying to us. They did it back in 2008. The central bank, the U.S. government, they were telling us that everything was fine, everything was contained. There are no problems in the foreseeable future. And it only took, 6-7 months until the whole thing came crumbling down. And we're starting to see things exactly happen at the same time. Now, the Fed came out from their meeting today, and they're saying they're removing the reference to global events posing a risk. They're saying everything's starting to pick up again. They're saying the labor market improved even amid signs of slower growth. The Fed also repeats economic situation warrants only gradual rate hikes. So in their head, they're looking at all the manipulated statistical information, relaying it to the public, and they're telling you that the economy is back on track. The global economy is doing fine. So we have to look at this and what the Fed is really saying, because they repeated this during the 2008 year. And it seems like they're doing the same exact thing, because at the time, the Fed chairman Bernanke, he was out there telling us that everything was contained, that yes, housing has dropped a little bit, but we don't see that as being a problem. We're seeing that housing is going to improve. They were saying that unemployment at that time, it was creeping up a little bit, but it was expected to go down once again. And what we're seeing is they're just saying whatever they need to say to keep the illusion alive. And this is exactly what the Fed is doing, because they can't let on that things are rapidly deteriorating. Because if you noticed, the only thing that's improved since the beginning of this year is what? Well, two things. The stock market, because it's manipulated, and all of a sudden gold and silver started to do much, much better since December. Because people are starting to realize, I need to start getting into hard assets. Things are starting to rapidly fall apart. But everything else that we've been reporting on is continually declining. It's not getting better. We're having a huge amount of layoffs. And all the statistical information that's coming out shows the opposite of what they're telling us. And they're setting us up at this point. They're setting us up for this gigantic crash of the system. And remember what they need to do. They need to convince us up to the very end to keep the illusion alive until they can have that great event. Now, out in Venezuela, we see that things are rapidly deteriorating in Venezuela. Right now, they have over 700% inflation. Really, it's hyperinflation at this point. The economy is contracting 8% this year, and it's getting worse and worse. And it looks like things are collapsing in Venezuela. And we should look at these countries as a model of what we might expect when the entire system falls apart, where we're going to see hyperinflation. We're going to see credit markets seize up. We're going to see supplies to the stores completely disappear. People are not going to understand or realize what's going on. Those people who are still sleeping, believing the corporate media, the U.S. government, the central bank, they're going to wake up one day, just like the people in Greece, just like the people in Cyprus, just like the people in Venezuela, Argentina, Brazil, and they're going to say, what has just happened here? But here it's going to be a much, much bigger shock, because the people, they're not going to be prepared for any of this, because they're living in a world of an illusion. And when the illusion starts to dissipate and reality takes its place, it's going to be a shock to everyone. I mean, I remember back in 2008 when everything was starting to crumble around and fall apart. I remember people, specifically one person who worked at an auto dealership, it was GM, and his pension was completely wiped out. GM was in big trouble. They were closing a lot of dealerships, and he was very, very nervous about how he was going to survive at this point. And it came as a complete shock because everything up until this point was fine. And then one day, he woke up and was starting to get the news that he might not have a job. And actually what happened is the dealership did close down, and he did find a job, but he was making half of what he was making, barely surviving. And still to this day, he's lost a lot of his pension. He's making less money, and we're approaching the same situation once again. And this is why everyone needs to be aware of what's going on. You need to be prepared for what is coming. You need to protect your wealth. And this time it's going to be much, much worse because we understand they have bail-in documents ready to go. They're not going to be looking to the government to bail out these banks. We know that they're going to freeze the accounts. We know it's going to be very difficult to get our money out of the banks. And we can see at this point they're going to be replaced with worthless bank stock as they take the currency to prop up their own banking system. And this is why you need to get ready and prepared for what is coming. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.